Hello everybody, welcome to our YouTube channel, Savills International Residential. Please don't forget to like and subscribe. We will be posting much more videos and much more content of this type over the next 6 to 12 months. So what we're doing today is we've invited Katy Warrick, who is the head of London Residential Research and has been for some time, an excellent knowledgeable brain for us to listen to. Katy's going to talk about what's been happening over the last 6 to 12 months, and I think more importantly for our consumer, what's going to be happening over the next 12 months. So it's Savills predictions for what's going to be happening in 2022. So without further ado, over to Katy Warrick.
Hi there. I'm Katy Warrick and I head up the London Residential Development Research Team here at Savills UK, and I'm going to give you a quick run through what's going on in the London market. So I'm going to start big and then zoom in on London. So we're going to look at the World Cities Prime Residential Index, where we track the value of all of these world cities over time. And the latest data shows that across the board, the prime residential markets have continued to strengthen. And 2021 has seen the lifting of most pandemic-related restrictions, meaning that average price growth remained positive. And the outlook for this year remains positive too. So the average across all of these 30 global cities is 4.3% capital growth. And in this table, we can see where we can expect to see the strongest growth, and London is 6th on the list. And I think it's interesting to think about what is happening in some of those other relevant markets. So Dubai is just behind, China a bit further below, where there's obviously the uncertainty around the real estate debt market and policy changes which have led to weaker sentiment here. And then Hong Kong a bit further down towards the bottom of the list, which we expect will improve when the borders reopen. Other Asian economies such as Seoul and Singapore are strong performers, but in Singapore the government is trying to cool the market by adding restrictions on foreign buyers. So more on that shortly. So now let's turn our attention to London. I'm going to talk a bit about the office market because there's been two big recent deals in the office market which have been quite exciting. So Google is the first one. They've purchased their offices at Central St Giles in Holborn, not instead of, but as well as their development of new offices in King's Cross. And then there's Facebook, who are looking to expand their base in London near Euston as well. And I think both of those indicate a strong view for London as a global tech hub, but also a strong stance on the return to the office. And also just this week, AstraZeneca announced an expansion of their headquarters in King's Cross, which is really helping to reinforce this part of town as a life sciences hub or a knowledge quarter. Another interesting piece of research which caught my eye, research by Henley and Partners, who are advisors on tax and residence. And they rank cities in the same sort of way. They rank global cities according to relocation considerations, which I think happen to be the same reasons as buying a property. So, for example, lifestyle, tax, education, healthcare, security and infrastructure all are important features, and London scores top of all 30 global cities. And then the final one is that the Forbes 30 under 30 data is interested for the 30 under 30 rich list. It highlights that tech is a strong sector and that London is a top city for young entrepreneurs to succeed in. Now, North America has the most young entrepreneurs by volume, but London has the most successful ones. And now let's take a look at price growth in prime London. Rather excitingly, we've seen it start to creep back up into positive territory in the last year, and that's having seen consecutive price falls in prime central London for nearly 8 years due to political and economic uncertainty, as well as the tax changes and then COVID. But the latest data records a high of 2% annual growth. And in those areas outside of prime central London, such as prime Wandsworth, Ealing, Hampstead, Islington and Canary Wharf in the east, we group those areas together and call them outer prime London, and you can see that there's been equally really strong growth in those markets, an average annual growth of 4%, almost 4% over the last year. Now, the outer prime London regions, they have seen a slightly different pattern of growth as those lifestyle drivers have come into play. So where people have prioritised having more space inside the house, but also more access to outside space. And in these areas, in particularly in southwest London, which has been the outperformer here, it's those lifestyle drivers and the strong demand for family homes with outside space. So we've started to see a real pickup in price growth and activity in the market, particularly in the last quarter, which leaves us feeling quite positive about the first half of this year. We've already seen international buyers are wanting to buy in London again, particularly at the top end, after a few years of watching and waiting. And it's easy to see why this looks like the right time, because prices in prime central London, they're still around 20% below where they were at the previous peak in 2014. So for a central London home, which would have cost 5 million back in 2014, it now costs just a mere 4 million. But if you're buying in dollars, that discount is even greater. So we know that London will be appealing for many investors. But when buying a property, it isn't just the price of the property itself that needs to be considered. There are often taxes, fees, and other costs that come with buying, holding, and selling a property. So when we compare these costs across our world cities, there are several things that we consider. So we're going to run through a case study, and we're looking at a non-resident foreign buyer. They're buying a property worth $2 million. They hold the property for 5 years. They don't live in it. It's not their main residence. They sell the property, and we're not taking into account capital growth here. And we know tax is important. And even though buyers of prime London property have seen an increase in the past few years in terms of how much tax they're charged, it still looks relatively good value on the global stage. And what this shows us is that when we compare the cost of buying, selling and holding across all of these global cities, this is despite buyers in London, they're no longer benefiting from that stamp duty holiday of last year. Governments in other countries are busy targeting foreign buyers, such as Singapore, who at the end of last year introduced stamp duty from 20 to 30% for these buyers. So London actually remains relatively competitive on the global stage when taking into account all of these costs. So where does that leave us? We've started to see price growth picking up throughout 2021, but the real factor is where those values now sit relative to their previous peak in 2014. And this is where it becomes acutely apparent that prime central London values are still significantly off their previous peak. We expect a bounce this year, but it will be more pronounced in prime central London, where is the greatest pent-up demand, combined with significant global wealth generation over the past 2 years. And this is from two sectors in particular, ones that I've already mentioned, the life sciences and the technology sectors. In other prime London markets outside Central, we see slightly more muted growth, as this market has seen stronger growth during the pandemic, and buyers here are likely to be more sensitive to those very gradual rises that we've started to see now in interest rates. So over the next 5 years, we expect that there will be the strongest growth in prime Central London markets, and that trend will continue, seeing 24% growth over the next 5 years. Quickly move on to the rental market now. The prime rental market has been even more volatile and saw significant rental falls in 2020. But halfway through last year, we started to see this trend reverse. Young professionals, wealthy international students, and corporate relocations were all boosting demand through this period against a lack of supply, as some landlords are leaving the sector due to regulation fears. Wage growth through this period has helped to facilitate this rental growth. And our top performer, Canary Wharf, has seen 13.5% growth over the year. But before we can get too excited by that, it did also fall the furthest during 2020. So it is just about making up lost ground. And we expect rental growth to continue on an upward trajectory, supported by income growth and the strong fundamentals for increased tenant demand. And we have seen even stronger growth in the mainstream rental market, where Zoopla data suggests 6.2% rental growth last year, driven by this gap between supply and demand. And as the return to city living continues, we expect to see rental growth across all London average at 22.2% growth over the next 5 years. And finally from me, some results from our buyer survey, which indicate the unwinding of some of these pandemic-related trends, but also suggest that some of these trends are here to stay. Almost half of London respondents have continued to rank being close to a park or open space as their priority when choosing where to live. But the easing of restrictions is also apparent because Londoners are placing importance on being close to their work. That has increased in February this year compared to when they were last asked in September last year. So that's all from me. Thank you for listening.
Thank you very much, Katie. As usual, that was excellent. Please don't forget to like and subscribe. And if you do have any questions for Katie or for myself or the team, pop a comment in the comment section below or send us a direct message. Don't forget to subscribe to both our YouTube channel, but also to Savills Digest, which is a twice monthly email newsletter, I guess, that updates you on some of the things that Katie's touched on, but also talks about what's going on in the London market, who's moving where with regards to office, retail and residential, and most of our clients find it quite useful. So give us a like and a subscribe and let us know if you want to be on the Digest newsletter. Thank you very much. Bye-bye.